Joining me here in the studio is Taha Arvas. He's a financial columnist at the daily Sabah newspaper. In London is Timothy Ash. He's an emerging markets senior sovereign strategist for BlueBay Asset Management, and TRT World's editor-at-large Craig Peters joins us from Paris. But Taha, I want to start with you. Welcome to you all, by the way. Taha, I want to start with you first. From where I'm sitting, there are two sets of issues facing Turkey. There's the long-term set of issues and there's the short-term. From Minister Al-Bayrak's speech today, I think he focused a lot on the longer-term structural issues, but did he do enough to address these pressing short-term issues of the lira, the current account deficit, inflation?
I don't think the speech today, the presentation today, was aimed at the volatility we've seen in the last 2 days. I think the markets may have expected it to be more in response to those changes. Perhaps I think it was more aimed at the audience, both in the room that he was in, the leaders of many public companies in Turkey, and the broader audience at home, saying that the Turkish government will listen to investors and business leaders more than it has in the past. That's what I think it was aimed at.
Okay. Tim, let me bring you in next. From your foreign investors' point of view, do you think the finance minister's statement earlier today, is that going to do much to bring in the foreign investment that is going to be needed to plug that current account deficit?
I'm afraid not really. It was very disappointing. Al-Bayrak's been in office for a month. There was not really any detail. I mean, yesterday we had a statement in terms of, which was kind of positive in terms of, targeting to reduce the fiscal deficit this year to 2% of GDP from probably it's going to be 3% if there's no action taken, and then 1.5% next year, and targeting a 4% current account deficit, I guess, next year, and then this 100% rollover target in terms of domestic debt. I mean, that was fine. That was published yesterday. But we wanted fine detail. We wanted really specific information as how Al-Bayrak is going to deliver on those targets. I mean, from a foreign perspective, looking at Turkey, unfortunately, there's been, a string of policy errors in the last year, particularly in terms of monetary policy. Why should we really trust Turkish policymakers to deliver on fiscal targets, for example, when the central bank has consistently over a decade missed inflation targets? I mean, 5% inflation target this year. The last print was 15.9. It's probably going to 20%. So, there was just no detail in terms of actually what is going to be delivered in terms of the specifics to reduce the budget deficit.
There were some promises in there, though, that obviously were aimed at the foreign investor, in particular the independence of the central bank. He stressed that quite a bit. He talked about bolstering the stability of the financial sector, balancing the budget. Did any of these resonate with you?
Look, I think investors are so frustrated now, particularly with the Central Bank of Turkey. July the 24th, it was a no-brainer. Inflation had risen 300 basis points in June. The data was suggested rates had to go higher. And they didn't raise interest rates. It was a huge error.
Right.
And the reason the currency is where it is at the moment is because the central bank didn't do what it had to do. Now, we can talk about independence of the central bank. The reality is the Central Bank of Turkey has not raised interest rates when it should have done. It should have been proactive. If it had been proactive and 6 months ago raised interest rates, it wouldn't be having to raise rates. 500 basis points that we're talking about now. Very, very frustrating.
Right. Craig, let me bring you in here. What's your reaction to that?
Well, whatever one's opinion of the foreign minister's PowerPoint presentation on the future of the Turkish economy, direct foreign investment and forex rates are largely based on the investment grade the big three ratings agencies give Turkey, which are right now subpar junk. My question here is, how did this PowerPoint presentation intend to improve Turkey's creditworthiness to the point where they're going to get that much needed investment to take care of their current account deficit, regenerate the lira, and more importantly, if they can't get it from the West,
Okay.
Where are they going to go to get it? Those are my questions.
Taha, let me put that to you. Where could Turkey turn to?
What I've seen recently, in recent weeks, recent months, actually since Donald Trump and even before that have been sworn in, is that the United States, it seems, and some of the European Union are pushing Turkey away from the West. I mean, they're doing everything they can to push the 70-year-old NATO ally into the arms, frankly, of Russia and China and the East. And today you saw this, this plummeting ruble, and the Russians are at it with the United States. We've heard of collusion and Trump working with Russia, but on the surface it looks like anything but. So in that estimation, if you're seeing this cold shoulder from Turkey, from the United States, who else does Turkey have to turn to but its neighbors? And so if it has no choice, it has no choice.
Okay. We're going to come back to you all. Don't go away, everyone. We will have more reaction in a second, because earlier we caught up with some of the business leaders who were at that presentation at the finance minister's speech earlier today on the country's new economic program. The president of the Independent Industrialists and Businessmen's Association, Abdurrahman Khan, for example, says he is confident the proposed steps will put the Turkish economy on the path to stability and growth.
Turkey is a very strong country. We have overcome economic crisis in 1994, 2001 and 2008. Last year, we were the fastest growing economy in the OECD. And as we heard in the finance minister's presentation today, we will focus on developing policies for sustainable and strategic growth. Also looking ahead, we will combat inflation without pushing up the taxes. These are important steps for the future, and we, as Mosiad, support these measures and the vision of our president.
The Turkish public authorities have provided a very clear picture in which they detailed how they will carry out the domestic process. On one hand, they showed they are not afraid of all the speculation made abroad. And we, the business world, yes, we do have certain economic expectations regarding some procedures, but the survival and security of this country and its vital interest comes first. Therefore, if needed, even if we have to pay a certain price as a nation, we are committed to keep the general economic structure stable.
Now, it has, in fact, been a turbulent few years for Turkey's economy, with the lira setting record after record for all-time lows. And it's as much about politics as it is about economics. Now, in July 2016, the Turkish lira suffered its biggest one-day drop in 8 years. It fell as much as 6% after an attempted coup caused a sell-off of Turkish assets. In December of that year, OPEC agreed to limit oil supplies, signaling higher prices for Turkey's import-dependent economy. In the previous 2 months, the lira had shed 15% of its value against the dollar. More than a year later, in January 2017, the lira fell 1.5% after worse than expected inflation data and a terrorist attack on New Year's Day in Istanbul. In May of this year, the lira hit 4.22 against the dollar after data showed inflation hit a 5-month high of nearly 11%. And just 12 days later, the lira fell to 4.43 against the dollar after President Recep Tayyip Erdogan promised to take greater control of monetary policy if he won the presidential election in June. And this month, the lira hit what was a record low of 5.11 to the dollar after the US announced sanctions on Turkey's interior and justice ministers. The sanctions were imposed in response to Turkey's detention of an American pastor on terror charges. Since then, the lira has continued to weaken, as some investors think it may only be the beginning of punitive actions against Turkey. And Turkey isn't the only one in Trump's line of fire when it comes to sanctions. Russia has warned that if the US follows through with threats to impose further sanctions, it'll be seen as a, quote, declaration of economic war, unquote. It comes after Washington unveiled a raft of new sanctions against Russia over an alleged nerve agent attack in the UK, which the US and the UK blame on Moscow. Russia has denied any involvement.
If we end up with something like a ban on banking activities or the use of certain currencies, we can clearly call this a declaration of economic war. And we must absolutely respond to this war by economic means, by political means, and if necessary, by other means. Our American friends must understand this.
So let's go back to our guest, Daily Sabah columnist Taha Arvas is still with us in the studio. BlueBay Asset Management Emerging Market Senior Sovereign Strategist Tim Ash is in London and TRT World's Editor-at-Large, Craig Peters, is in Paris. Craig, I want to pick up with you next. You and I have talked a lot about the weaponization of the US dollar and the fact that Trump has chosen today to double these tariffs on aluminium and steel imports. I suppose feeds into this narrative that Turkey is being besieged, as we've heard from Erdogan and Putin today, that there is a war going on. Is there a war going on?
Yes, there's been a war going on since the moment Donald Trump was elected president of the United States, as we've reported on Money Talks since that election. It's now ratcheting up. These hyperinflationary missiles have been fired. Now, today, when we had President Erdogan described it waging an economic war, and Trump saying relations between the U.S. and Turkey aren't good. Well, how soon is it going to be then when the Incirlik Air Base becomes part of this argument? Because the U.S. has clearly weaponized the U.S. dollar, and they're not making any apologies for it. And Turkey is correct in feeling besieged. There's no doubt about that. But there's one key point here, Azar, okay? Turkey is in the economic doldrums. It needs Western capital. For that capital to come, it has to undergo a rigorous and successful rating by one of the ratings agencies, and they're not going to do that. Now, whether someone wants to brand that a conspiracy or not, I will give them that right to do that. But that is a market reality, which means that Turkey has very few choices left. They could go with China. They can't go with Russia.
Right.
Russia is broke. Right. And the Iranians don't have 2 reals to rub together. So I don't see how Turkey at this point, based on today's PowerPoint presentation, can get over this hump.
Okay. Tim, let me bring this back to you. Is the US using the predominance of the dollar to get its way in foreign policy, or is this pure and simple market forces?
Look, bottom line is there's faults kind of on both sides. You know, if you look at the Turkish-Western relationship over the last 7 or 8 years, I mean, it's 6 of one, half a dozen of the other, right? But in the end, unfortunately, Turkey faces this position where 2/3 of trade, 2/3 of financing, and 2/3 of investment comes from the West. Turkey has this big external financing gap, around $230 billion it needs to finance. It doesn't have enough reserves. As was mentioned, Russia is certainly not going to write checks for tens of billions of dollars, and I don't think the Chinese are either. So, you know, there needs to be a normalization in the relationship with the West and with the US, and that needs compromise on both sides. Unfortunately for Turkey, this comes at a very difficult time because lots of different reasons, but, you know, we have Fed tightening, we have lots of focus on countries that have big external financing requirements and policy that's not appropriate. And, but in the end, you need to do what you need to do. And unless there is a normalization with the US, unless domestic policy becomes orthodox and investors can trust in it, then you're not going to stabilize things. Things are going to get worse. Inflation is going to go higher. The currency is going to go weaker. There's going to be pressure on banks, pressure on public finances. Now, this is a really serious situation that needs action now.
Right.
You know, it's not a question of a 100-day program. You need a 100-hour program at the moment.
Yeah. Look, so you talked about orthodoxy. It looks like, at the moment at least, Turkey is not near an orthodox economic program, Taha. Could you see a situation in the not-too-distant future where perhaps Turkey imposes capital controls?
I don't see that at all. I think that would be a kiss of death for Turkey or for any economy. I don't see that at all. But I want to add, speaking on Tim and Craig's points here, the saving grace for Turkey might be in its 2/3 of investors that Tim was talking about that invest in Turkey. If Turkey goes under, or God forbid, if this currency crisis goes any further, it will ruin all of Europe. This will be the spark, the contagion that kills the United Kingdom and France, where both Tim and Craig are. I mean, their stock exchanges plummeted today. Their currencies, the euro and the sterling, were down heavily, not least because of this fear of contagion from the Turkish lira. Frankly, the United States is, the core inflation just came in way above what was expected. The United States is one spark. The world is one spark away from another 2008 global recession. And Turkey could be that spark. So I think...
Azar, that is absolutely correct.
Yeah.
And it goes back to what we've discussed about what collateral damage President Donald Trump is willing to accept in this trade war.
I think,
and that question remains outstanding.
Right. Okay. I do want to come back to this issue of capital controls, though, because what has started as a whisper is now getting louder in the financial markets.
Right.
Taha, you said it would be the kiss of death. Tim, I want to throw it to you. Capital controls. Would it be the kiss of death, or is it a possible policy option?
Absolutely not a policy option. If Turkey goes down that route, it will not get any financing from international capital markets for a very long time. Forget about growth, forget about stabilizing the currency. Very, very bad idea. The positive thing is I think Turkish policymakers and I think Turkish politicians, including President Erdogan, absolutely understand and believe that, and I hope that remains the case. I would just go back and say I don't really agree with this line that, if Turkey goes down, there are going to be big global ramifications. I mean, I just don't buy that story. Turkey shouldn't really overplay its hand. I mean, I guess in the political battle at the moment with the US over Brunson, I mean, I think there's this assumption, for example, that Turkey's NATO membership and its NATO linchpin status is really important. I mean, I think you need to realize Trump doesn't care about NATO anymore. I mean, so his willingness to pressurize Turkey is, I think, a reflection of, Trump thinks outside the box, and I think it's pretty dangerous at the moment to think that somehow Turkey has leverage in terms of NATO, in terms of global markets. Turkey should just focus on what it can actually do, which is to normalize policy, real proper policy.
Okay.
Central bank. I mean, I'm sorry, but Central Bank of Turkey at the moment is really not up to task. We need far-reaching changes at the central bank. We need orthodox policy. Rates need to go higher. Fiscal policy needs to be tightened.
Yeah, I'm really sorry, but we are out of time.
No capital controls.
And no capital controls. All right, well, we shall see.
Not.
We are out of time, gentlemen. Timothy Ash of BlueBay Asset Management, Taha Arvas, Daily Sabah, and, of course, Craig Peters. Thank you all very much indeed. Now, the weaker Turkish